Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. I am Sagar Nandi, active trader using only one trading system Q that I developed myself. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. Charts that often move the market. Let's start with dollar index. In the last market recap, I mentioned that because the trend line resistance was broken, which was here earlier, dollar index was in an uptrend, and now that uptrend is continuing. It is having higher low, higher high, and it is gradually going up. You may notice this pattern of an instrument changing from downtrend to uptrend. Initially, it will have only downtrending lines, memory lines. Then it will have uptrending and downtrending both lines. It will be in a triangle pattern, and then eventually only the uptrend line will remain, the downtrend would be broken, and since then it would be in an uptrend. This technique of observing the formation and breaking of trend lines is the most accurate mechanism of identifying when an instrument is changing from downtrend to uptrend. Dollar index is going up. If it goes up, it may put pressure on the market, though that inverse correlation does not always work. The other instrument that influences the market, that influence is ever present, that is of mega cap index. Mega cap index is extremely overbought. It has been very strong in recent days. We can see that from the relative performance line sharply tilting up. If you look back, you may notice how beautifully the memory trendline supports caught the very low of the instrument. Now it is bullish, but it is too overbought for me to buy. Instead, if it reverses from this area, that will create a false upside breakout, and I'll be happy to look for shorting. Later on, if I have time, I may look at some of the mega cap stocks and show that some of the mega caps are not as strong as the overall mega cap index is. Those may be lucrative shorting opportunities too. So there are two ways to find shorting opportunities in mega caps. One is if it reverses from the watermark resistance, creates a false upside breakout, that will give shorting opportunities in stocks, mega cap stocks, at a very high price level. Or you could look for mega caps that are relatively weak, weaker than the mega cap index itself, and look for shorting opportunities in them. If you are looking for shorting the top opportunities, then I may suggest, that's my preferred way of trading myself, I may suggest using short call vertical. And if you are shorting a mega cap that is weaker than the index itself, that may be already in a downtrend, then you may short it using the stock as well, or you could use verticals as well. Mega caps overall is certainly bullish, but it is overbought. Now let's look at market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market, internal health. When it was extremely oversold in terms of both 3-month new high low and percentage of stocks above 50-day moving average, I suggested buying. That was the right time to buy. Now it is up a lot. It is not yet overbought, neither in terms of percentage of stocks above 50-day moving average nor in terms of 3-month new high low. In terms of internals, it is not overbought, but if we look at a glance weekly daily, that is also overbought in terms of stretch band indicator. It has come a long way since the time it made a big move up 3 at jump thrust low and price extreme low. As I often mentioned, that pattern hardly ever fails. It didn't fail for the total view too. The market rallied after that pattern, and the pattern works because somebody stepped in and caught a falling knife. Not a person like me, somebody very big player who had much more confidence on the market at that time. And when they stepped in to catch a falling knife, it is more likely than not that the instrument will go up if the fundamentals are strong. And this is total view, the broadest view of the market. It did very well. It is also overbought now. I will look at the composites this week, because though the total view itself is not overbought, parts of the market is overbought. This is drilling down from total view to the composites, Nasdaq and NYSE. Nasdaq is not extremely overbought, but NYSE is reaching there in terms of percentage of stocks over 50-day MA, and in terms of 3-month new high low, it has already hit the overbought condition. And in fact, if you look at the major indexes, I will not spend time on that. Several major indexes, for example, Nasdaq 100, I think that has also hit the extremely overbought condition. That works like a clockwork. At least some stocks pull back after that, so much so that this oscillator itself pulls back. That means some stocks must be pulling back from the high. Therefore, whenever this oscillator or both of them are at extremely overbought condition, I stop buying, at least in those pockets. This is a warning sign. So far we saw bullishness. We didn't see warning signs much other than stretch band indicator. Now in terms of internal health also, we see that it is overbought. So both external view, stretch band indicator, and internal view, 3-month new high low, is telling us that it is more risky to buy now. It is so extremely overbought that a pullback is likely. And who knows, the credit rating downgrade by Moody's may act as a catalyst, or that's how it will be shown. We'll figure that out next week. After internal health check, external view, this is how most people around the globe see the market. SPY very bullish in both weekly and daily, and it is also overbought. Not a time I would like to buy, at least not constituent stocks that are overbought like this. In the past, that has served me well, and I would like to continue with that discipline, not buy instruments, not chase instruments that are already so overbought. And this is S&P 500. Nasdaq 100, similar, but let's go back to SPY for a minute. Notice the candle shapes in weekly and daily. Both are very bullish. If I go to QQQ now, weekly is very bullish, but daily is relatively weaker, and we can see that from the relative performance also tilting down. Stretch indicator shows it is too overbought to buy now. Dia, very bullish in weekly, and daily is also bullish, similar to SPY. Notice that earlier it was underperforming. It was going up, of course, going up, but it was underperforming, shown by the relative performance tilting down. Friday it outperformed. Some rotation came into the market. We'll see further proof of that later. Maybe some of that will come from IWM also. IWM was underperforming for a long time. Just Friday it slightly tilted up. IWM is also overbought, not a time I'd like to buy, and even more reason for me not to buy the outperforming instrument IWM is that it is right at the trendline resistance. It is also at this watermark resistance. Instead of buying, if it reverses from here, or even better, if it tries to go up and reverses again, comes back below the trendline resistance and watermark resistance, I'll be quite happy to short. All the market instruments are showing that market is bullish, but it is also overbought, and IWM is showing, though it outperformed on Friday, is the last one I'd like to buy because of the in fact I'd not like to buy any of the market ETFs, but IWM I'll be more happy to short if it reverses from the resistances. But not yet. Right now there is no signal for shorting. Moving on to Q Edge, it has bucket analysis thanks to Dr. Jeffrey Scott. As you know, already several of the techniques I implemented after observing Dr. Jeffrey Scott's videos. Thanks to him. Some came from Mr. Ian Woodward, may him rest in peace, and also I learned from many others, including Ken Slim, Dr. Alexander Elder, etc. Now bucket analysis works very well, and again I will show the proof of that. Works like a clockwork. And QH also has sector industry stock breadth, shows where the market came from, where it is now, where it may go next. I don't trade without QH. It is always running on one of my monitors. This is QH. This is the workspace version. Most of the traders don't have workspace yet, but it will be released soon. You may see workspace is online. In the last market recap, I explained that in the workspace version of QH, if you choose United States of America from the country drop down, it will use S&P 500 stocks. If you want to use S&P 1500 stocks, you may use custom. Now custom can be in fact anything. So if you are a global fund manager, you may make a custom list of the top stocks as per your assessment from all the markets of the world. Then the question is, how do I set the custom stock list to whatever I want? That is from QVital. If you go to QVital Universe tab, this is in the workspace version. It was there in the icon version, but it was not publicized, but now I am publicizing it. This feature in Universe tab, you may put your cursor on any symbol list. So you could create a list for S&P 1500. How could you create that? You could create that using Q index, which is here. And if you put your cursor on that column, I have added a button in Q icon. The button was hidden in the public release. If you use this button, you will see the custom list is replaced by wherever your cursor is, whichever list you are choosing. That is how you update the custom list. By default, when releasing, QH custom list will be set to S&P 1500, and once in 3 months, once in 6 months, maybe once in a year, you may reset the custom list with the latest S&P 1500 constituents. That is how you set the custom list in QH, and currently in this video I am using the custom list as S&P 1500. What is the bucket analysis saying? And here I'll make a comment, something we observe from bucket analysis every day, but when we watch it day after day, it gives us additional insights. I talked earlier about rotation when looking at the market ETFs, that small caps did better in the last few days of the week. DIA did better. QQQ did relatively weaker. Relatively, it also went up significantly, but it did really weaker. Some rotation went on, and that rotation would be also clear if you observe bucket analysis day after day. How so? A few days earlier, I tweeted, I'll not go to my Twitter page now, but you could go to my Twitter page, scroll down, the Twitter handle is Superior Profit. You could scroll down, you would notice I shared a snapshot of Q Edge here. Okay, let me go there. I shared a snapshot here on May 12th in the morning session and showed that the percentage of stocks above upper Bollinger Band from bucket analysis hit 51.6%. That was too overbought, and I predicted that a pullback would be likely. Pullback In what stocks? The stocks that were above upper Bollinger Band. So this percentage 51.6 was likely to come down, and that did come down. Let's look at it today. From 51.6, now it is only 6.7. Didn't I say it works like a clockwork? What does it mean for a trader? If you are swing trading, you could find out those stocks that were extremely overbought. How could you find them? You could find them, for example, using Q Global Scan, overbought stocks, and then look for a proper reversal short setup. Q has multiple reversal short setups like bounce, box, headwind, etc. You could look for a short setup in those overbought stocks, reversal setups, and play them with short call vertical. You do that only in relatively weak industries, in weak fundamental stocks, and more likely than not, you would make a profit, because from 51.6, the percentage of stocks above upper Bollinger Band came down to only 6.7, and using bucket analysis and other Q analytics scans, you could capitalize on that. Now, though the percentage of stocks above upper Bollinger Band came down hugely, the market itself went up, and that is what you gather when you observe the bucket analysis day after day. What does it mean? That also means that some rotation went on. The stocks that were leading earlier above upper Bollinger Band, they pulled back, and the stocks that were, for example, below the mid Bollinger Band. Notice the graph pattern here now below mid Bollinger Band, and if I go back to the tweet, that was also here, also it was down, now also it is down, but there is a shift. I am not going to spend time, but if you observe here, more stocks came up in this area, and some stocks came down from this area, the uppermost bucket. That also showed rotation. Currently it is not overbought from bucket analysis, but observing bucket analysis in that way is showing that a rotation is going on. What kind of stocks are outperforming now? Let's look at the sector rotation. For 5-day, it is still consumer discretionary and information technology. Those two are the strongest sectors. But if we look at Friday, which ones are the strongest sectors? They are consumer staples and healthcare. What about 2 days? That is consumer staples and utilities. That is also showing a rotation is going on. And that is coinciding with the relatively weak performance of QQQ. So QQQ was the strongest earlier when Infotech was the strongest, as it gave way to the defensive sectors. QQQ also relatively underperformed. So this rotation is going on. The weaker stocks are going up and the strongest stocks are pulling back. Not that they are necessarily in a downtrend, but they are relatively weaker. Let's look at the sector industry stock breadth from 1 month to 1 day, and this is overbought. When all the pie charts are around 80% or more, then it is so overbought that I don't like to buy. Usually I don't like to. That's the market level conclusion. I could buy high dividend paying stocks at a low price level. Those are safe bets for me. You have to assess your risk tolerance. I could even play them with short put naked. But at the market level, in general, looking at this secondary stock breadth, I would not like to buy. So more and more evidences are piling up of not buying now, but may look to short, but not yet. Weekly technical breadth. This is also extremely overbought. When the weekly breadth across all the pie charts hit 80% or more, that is extremely overbought. That is a time to be cautious. This is also telling not to continue buying. Daily breadth is bullish, that is expected. Friday was very bullish. And here also we see the bullish trade setups are not coming from stocks at price extreme high. That is also showing the rotation going on. Though the stocks that were above upper Bollinger Band are not going up, they pull back from huge, more than 50% to less than 10%. The stocks that were at a lower price level, not at price extreme high, they are now giving buy setups. So that is also showing a rotation going on. Defensive sectors are now outperforming. Market level summary, the most important trading decision is whether and where to buy or short, or whether to stand aside. I would prefer to stand aside, not like to buy now. In fact, after the Moody's downgrade of credit rating of United States of America, after the market close, regular market close, that announcement came. After that, the futures pulled back. But whether that has any effect on the market, we'll only figure that out maybe in the overnight market on Monday, Sunday evening, or regular market Monday. We'll figure that out. But in any case, even if we didn't have that announcement of credit rating downgrading, looking at the Q analytics, I was not willing to buy anyway and not ready to short yet. Review of last week's trade ideas. I shared only one stock, that was BP. That was a buying idea, and the reason for selecting that stock, one of the reasons, was this dividend yield, high dividend yield of 6.4%. When I shared it, it was slightly higher than that probably. In any case, it's a reasonable dividend, and I shared it 1 week ago. Let's look at the chart. I shared it on this day as a gap up move and a breakout long trade setup. Tried to go up, it pulled back as oil also pulled back, but it is in an uptrend. And if you played it with short put, considering its dividend yield, there is no reason to come out of the trade. Short put, naked short put, considering dividend yield is not a short-term trade, one may continue to hold it. This week's trade ideas, I am not very keen to buy stocks, except maybe some high dividend yield stocks at a lower price level. I have not looked for anything. Let's try to find some stocks with high dividend yield. Let's say dividend yield up to 5%. see if their industries are strong. And let me try to find industries that are accelerating, because we saw a rotation is going on. Instead of looking for industries that are strongest, because I am playing with dividend yield stocks, dividend yield stock. Let me try to find stocks that are in industries that are accelerating, which were underperforming earlier, like diversified chemicals, hugely underperforming. Now it is strengthening with acceleration, like commodity chemicals. Isn't it interesting? Diversified chemicals, commodity chemicals, both are accelerating. When they come together, similar industries, then we have even more confidence to take trades in them. So let's find the stocks in that list. Left with 134 stocks. Okay, dividend yield, let's get up to 5% and see if they have any trade setup. Only 4 stocks. Why don't we have a look at them? SSL, this is an ADR. It's not an American company. It's also listed in the USA as ADR. This is what I looked for. It has a flow buy setup. Daily is starting to go up with higher high, higher low with bullish flow. Weekly is bullish. Weekly has a nice breakout from the trend line resistance. It is about to regain the yellow direction line. Okay, let's look at the next one, LYB. This is also ADR. Interesting. NV means it must be listed in another country. This has also a flow trend following long setup. Has trend line support, no trend line resistance. Weekly allows taking the flow buy setup. So LYB is also looking good. LYB to me is looking slightly better because SSL Friday's candle, if I may go back to SSL for a minute, SSL Friday's candle itself is a very narrow body candle, which is not so in LYB, and it pulled back after a gap up open, pulled back with discipline, held the trend line support and went up nicely. So this is one I may prefer more. Let's delete SSL. This is exactly how I find stocks in my real life trading. Next is WU, Western Union. I don't like it because it has trend line resistance nearby, though it has a proper flow setup and it broke out of one trend line resistance. Because there is another trend line resistance nearby, I would not like to consider that. Left with another one, AMCR. This also has a trend line resistance nearby. I would not like to consider that. So let's go back to the only stock that we found, LYB. What is this stock? This is in an accelerating industry, and because it is in an accelerating industry that was weak earlier, probably it is expected that the stock was also in a downtrend. Interestingly, the bullish headwind in weekly and daily came near the very lows. Now it is in an uptrend with a proper flow setup. Let's look at its one page fundamental scorecard. LYB's vital scorecard, undervalued stock, insiders are buying, 83% of peer stocks went up on Friday, and this is what I started with. High dividend yield 8.9, therefore almost 9% dividend yield, and it's a profitable company. This particular stocks industry scorecard, it would be accelerating, of course, that's how I found it. Commodity chemicals was one of the worst performing industries. It is weak still, but it is accelerating rapidly. So if I buy in the current market situation, I would like to buy stocks like that, defensive stocks in terms of dividend yield, so that I don't need to get stopped out suddenly. One way to play it with naked short put, you may or I may use longer term naked short put with 9% dividend yield, and the gain from the short put selling, the effective annual rate of return would be quite high. Of course, you would have to assess whether selling naked put uh, is appropriate for your own trading. We'll see how the market plays out next week. If it starts to go down, I would like to short, but I'm not looking at shorting opportunities now. Having said that, let me look at few mega caps. I mentioned earlier that mega cap custom index is very bullish. So if it reverses, then you could also look for stocks like Microsoft, which rallied hugely. If the mega cap custom index reverses, this may also reverse and create a false upside breakout, and it will also probably break the trend line support. That may be a time to consider shorting Microsoft. What about Nvidia? It is not similar to Microsoft. It is not near resistance. Why I came here is to show how I use the charts to decide which one has lower risk of shorting. That would be Microsoft, and another stock I wanted to show, Google. See, Microsoft and the Megacap Custom Index are at a very high price level. If we short them, those will be shorting the top, short put vertical, and Google is not like that. Google is actually languishing for last 2 days. It tried to go up but closed down from the open with a solid body candle. This is not looking bullish. Certainly, I mean not relative to the Megacap Custom Index. After this huge down move, see, in one candle it came down so heavily, took a long time to go up, and in fact created a false upside breakout at the white direction line and also at the watermark resistance level. So if we are looking to short this, provided it comes down next week, it will be shorting a weaker stock in mega caps. And if we short a stock like Microsoft, if it creates a false upside breakout next week, that will be shorting a stronger stock in mega cap. Both are profitable over time, over hundreds of trades. Both techniques work. You may choose the technique that suits you. I'm comfortable personally choosing both of them, but none of them are short candidates now. On the long side, my choice this week is LYB, probably with naked short put, a longer term trade, which I would not mind booking profit in short term also if it gives a nice profit. let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.